Good morning, everybody. A major Australian bank, ANZ, has withdrawn cash from many of its bank branches. So it's no longer going to hold cash in its branches, maybe not the big major branches, but the regional and rural branches. It's going to stop using cash, which means that its customers are not going to be able to make cash withdrawals at most of their branches. This is going to disproportionately affect older people and people in rural communities who use cash more. And they've been roundly criticised from all sectors for doing this, but they're going ahead with it anyway. And this seems to be the general move by banks all over the world to reduce their customers' access to cash, but not until this announcement has a bank actually brazenly said, we're going to stop holding cash in the branches. So it's going to be impossible for you to go and make a cash withdrawal. You'll have to use an ATM. What they've said as a rationale for that is that fewer people are using cash these days, which actually is true. But what they've said is that, well, people can use ATMs instead. But the problem with that is that ATMs are being withdrawn all over the place as well, particularly in Australia. The figures are shocking, but also around the world. In Australia, the figures are that, well, for branches anyway, there's 30% fewer branches now than there were 5 years ago in total in Australia. So as well as closing branches, the ones that remain in ANZ, most of them are not going to be giving out cash. But they say go and use ATMs. But in Australia, since 2017, the number of ATMs where you can withdraw your cash from the cash machines has fallen precipitously from 14,000 to 6,000. So there are less than half of the number of ATMs around than there were 5 or 6 years ago. So you can't withdraw your cash from the bank. They say go and use an ATM, but all the ATMs are disappearing as well. So this seems to be part of a real general move to stop people, not just from using cash, but from going into, or to force or coerce people to go into using digital methods of transactions. This is the case in the UK as well. And I know over the last year or so, I've had numerous people write to me saying, I can't withdraw £5,000 or £10,000 from the bank. I'm having trouble getting money out of my own bank. And this has been going on. So, you know, a lot of people have written to me saying this, and with great concern and alarm, because, you know, I'm used to, I mean, I don't have a lot of money myself anyway, and I spread my money around different banks just in case one of them goes under or something like this happens. If they all go under at the same time, it doesn't make much difference. But if one does, then, you know, at least I've got something left. That's not financial advice, by the way. That's just what I do. But, you know, I was always brought up to understand that if you put your money in your bank, it's yours and you can take it out whenever you want, and you can take out as much as you like because it's your money. But that's no longer the case, it seems, because your money in your deposit account has been reclassified. So you're no longer the owner of that money. You are the depositor of that money, and the bank is the owner of that money. And although in theory you can take it out, because if they just stopped you from taking it out totally and forever, that would be theft. But or legally, I don't know if it would be theft because they own the money. But, you know, the whole sort of confidence in banks would crash immediately if that happened. But they are now putting restrictions on how much you can take out at one time. So, you know, people have sort of worked out by trial and error that if you take out, you go to the bank counter in the UK, this is, and you ask for something up to £2,000, it's probably going to be fine. They will let you do that. But if it's something like £3,000 or over, they will stop you from taking your money out, or they will say, well, come back later and take it out later. We have to do some checks, or they ask you what it's for, and they won't let you have your own money. Well, what you think is your own money, but it's now technically the bank's money. They won't let you have that until you can prove and justify why you want it. So if you want £10,000 to go and buy a car, for example, in cash, and you don't want to tell the bank, it's none of their business what you want your money for. But they won't give it to you unless, they will only give you a smaller amount. But even if you go back, 5 consecutive days and you take out £2,000 a day, they will still be recording and checking that. And then on the second or third day, they might go, what's going on here? And then put a block on your account because they see something going on that is anomalous. And this is what they're doing. Now, in the UK, I don't totally blame the banks for doing this because they are now under the auspices of new regulations that say that they are responsible for fraud, and they're also responsible for stopping terrorism and money laundering. So you find it hard sometimes to do certain digital transactions even. I had someone write to me the other day. He says, look, I had my account was blocked because I tried to buy some gold and they blocked my account. I've got it unfrozen after a few days, but they said the bank's rationale for this was, well, there's something unusual going on. If the customer actually now is deceived or the victim of a fraud deception, the banks are liable for the money they've lost in the deception. Whereas before, it was entirely up to the banks to say, okay, well, you've been a victim of fraud, we might compensate you, we might not. Now the regulations are very much on the side of the customer. So if they've been deceived by fraud, the banks are on the hook for that. So of course, they are putting far, far more rigorous restrictions and checks in place when you spend your money digitally. Now, I understand that, it's terrible to be a victim of fraud, but what this is doing and bringing in is the control system where governments are working with banks and mega corporations to block you from spending your own money on something. And unfortunately, if people have free choice, they sometimes are the victims of fraud. Fraudsters come at me all the time. I'm getting emails, every other day saying, pretending to be from Amazon or Yahoo or Google or Barclays or something, saying, oh, press this, your account is out of date, you need to press this button and put your details in and we'll unfreeze your account. It's total nonsense, of course, but these kind of fraudulent phishing attacks and hooks, they come at you all the time. And if you haven't got your brain switched on all the time, you can very, very easily fall victim to one of them because they're just ubiquitous. So but now the banks are responsible. If a customer gives out their details through deception, the banks are responsible. So they are blocking customers from sending their money digitally to people that they don't know and they're not sure about, because otherwise they'd have to pay up. So that's the new regulations we have in the UK that mean this is happening. But in terms of cash, the reason why they're not giving you cash and the rationale and the justification for that is because of anti-money laundering legislation, anti-terrorism legislation. So they have to say, well, it used to be £10,000 was anything under then, just was given a free pass. £10,000 or over, they would check and ask you. But now that limit has gone down, and I heard the other day Ursula von der Leyen, the president of the EU, one of the 7 presidents, I think she's the president of the the council of the EU rather than the Parliament. But she was saying, yeah, we need to actually check and block and control even small transactions of a few €100, or she's talking about euros, but of course the equivalent would be pounds and dollars rather than. So the limit that they check on is gone from 10,000 down to something between 2,000 or 3,000, and they're talking about making it just a few £100 and blocking you from having access to even small amounts of your money without it being checked and validated by the banks, and obviously via government regulations of what's going to be coming in to force them to do that. So because of these anti-terrorism, anti-money laundering rules that we've got in the UK, the banks are now withholding your money from you when you want to withdraw it down to much, much lower levels in cash amounts than they were doing before. This is what's happening. The other reason is partly our fault as well, because from a business rationale, you can understand this from the bank's point of view. People are using cash less. Back in 2015, the majority of transactions were done in cash. But then they brought in chip and pin and these automatic payments. What is it? It's pin and swipe. You swipe your card over something. And it's very convenient. And in the UK, first of all, you could only have a £15 limit. So you could use your card to swipe payments up to £15. So you could buy, a sandwich or something, or a cup of coffee. Then that limit was increased to £45. Now that's been increased to £100. So most people can go into a supermarket, do a weekly shop, or you can fill up your car with petrol just by swiping your card. And this means that people use cash less because it's more convenient to swipe your card than use cash. But what this actually means then is the number of transactions that are undertaken in cash as a percentage has plummeted from the majority, like well over 50%. In Australia, it's down to 13%. So only 13% of transactions in Australia are done by cash. The rest are done digitally, either online or with a swipe card in a shop or a retail outlet. In the UK, there's it's not quite as bad, but it was down to 15% in 2021. But figures show there's actually been a slight increase in people using cash in the UK. So that's bounced back up a little bit to 19% in 2022. But that still means that 81% of transactions were done digitally. Online or with a swipe card. The relatively few were done with cash. So if people stop using cash, it costs the banks money, of course, to actually provide a facility to use cash, to give you cash, to take in cash, to handle cash, to transport cash around in security vans. So they would like to get rid of that cost if they can. And maybe what ANZ is trying to do is just experiment and see what will happen to their business, to their profit line, if they just get rid of cash altogether. It wouldn't be surprising to me if this was actually an experiment, a trial run. What will happen to a bank if they totally remove cash and just go digital only? I mean, there are digital-only banks already, but they're new ones. They're not ones that have been established. I mean, in the UK, there's a whole range of internet banks which are they are internet only. They are digital only. There's Monzo and Rivulet, or I can't remember all the names of them. Tide and other things. Capital One, etc. There's loads of them that are just fintech, financial tech companies, set up internet-only banks where you bank on an app only or online only. There's no physical branches. They don't handle cash. There's many of those banks, but ANZ is an old bank set up, decades ago. I don't know when it was founded, 20th century, maybe even the 19th century, I don't know. But those older banks all have a network of branches, physical branches with staff. They handle cash and they do all of these other services. But as people use cashless, as people use checks less, hardly anyone uses checks anymore. But as people use cashless, maybe this is the experiment that they're saying, okay, well, we're going to see what happens if one of these older established banks with branches that always has handled cash just suddenly stops. What will happen? What will happen to the customers? What will happen to its business? Will people leave? Will people go? I'm sure that some people, up in the echelons of the World Economic Forum, will be very interested to see what's happening. So even if this wasn't deliberately designed as an experiment, it is in effect an experiment, because we're going to see what happens when an old bank suddenly stops using cash, and what will happen to the number of customers, the turnover, and whether it will sink or swim, or even do better or do worse. We'll see. But it's certainly a very big warning sign, because I use cash, along with digital methods. Obviously, if I'm online, I'm buying, I can't use cash when I'm buying something online, but I'm trying to get back to use it more for small everyday purchases, so I don't go to the big supermarket so much. I go to my local butchers, my local greengrocers, and I buy my food in cash most of the time. And yeah, that's all I really spend my money on. Most of it. I don't have an extravagant life and to spend my money on all kinds of other things. But even sometimes if I go to a restaurant, I pay in cash now. I had a phase of paying in cards, but now I realise it's important to use cash, because the more that prime indicator goes down, in Australia, only 13% of transactions are done in cash. In the UK, it's 19%. If that goes down more and more, then banks have more of a business rationale to get rid of it. But if we start using cash again, as seems to have happened a little bit in the UK, if that number goes up from 19% of transactions to 20 to 25 to 30% again, then there will be less rationale for banks to withdraw cash from their own basis. But obviously there's other pressures from governments and globalists to implement central bank digital currency. And that needs to be resisted as well. And the only thing that we can do as people is to use cash more. So if you're watching this, please do go out and use cash wherever you can. Withdraw cash from your banks, withdraw cash from the counters, withdraw cash from the cash machines, and then go out and spend cash rather than using your swipe card, because it is more convenient to do that. You are positively coerced to do that because it's more convenient, but the long-term consequences of that is we'll lose cash, which means we lose freedom, because ultimately then the banks will monitor and control all of your transactions, and so will the government ultimately, if they bring in programmable central bank digital currency, which is what they want to do. So, if I was in Australia, and again, this is not financial advice, but just personally, if I saw this happening, if I saw a bank was withdrawing cash, well, I would leave it and go to another bank, just out of principle, because it's wrong for the future of society. So I'm not advising anyone financially there, but that's just what I would do personally. So, people have got to make their own decisions about what they do there in Australia and in other nations if this kind of thing is brought in here or there. So there we go. The war on cash continues, but we need to resist and take the steps necessary to keep cash on a political level. Finally, I would say, I'm leader of the Heritage Party, obviously. We're the only party that has it in our manifesto to require all retail outlets to accept cash as a form of payment. They can accept digital currencies to their heart's content, but our manifesto says we will introduce a law that says they must provide cash as a payment option. And, you know, I talk about this. Some railway stations, some areas and some zones have all abandoned using cash. You know, some coffee shops you go into, it's digital payment only. I don't use them, but they should be required by law to allow you to use cash. And we would do that in the Heritage Party because it is part of our heritage. And we do not want discrimination, actually, against people who are not able to have access to digital currencies. A lot of them older people who just use cash, because that's what they've done. Poorer people, children who can't open a bank account, etc. People who, for one reason or another, you know, maybe are homeless, or you know, they don't have a job, or they, you know, don't have a regular job and can't get a bank account and just live cash in hand. For them, they have no option. So not providing cash is discriminatory against a lot of people. You know, that's real equality, actually, making sure that everybody is able to participate in the economy, not this fake equality and wokeness. But, you know, I could make many, many videos about that. There's a whole range of topics to talk about there. But this is about the shocking news that we have today, that a major Australian bank is stopping cash withdrawals at most of its branches. Sign of the times, but let's carry on resisting. Okay, God bless you all.